Happy Friday, everyone. I'm Merle Huckabee, and today is Friday, September 24th, 2021. Welcome to Real Talk. You know I like to talk about real people, real issues, real life. This is Real Talk. Beautiful day here in Chicago. Definitely some great weather for this time of the year. Fall made its entrance a little bit earlier this week, and it's definitely coming because, as you know, when the seasons change, it certainly does start getting darker a little bit earlier. Kind of want to, before I introduce, I have two guests today. I want to talk about a few things that that are very concerning to me. You know, I do this show because I think that we have a lot of things we need to talk about. And the news, Channel 5, 7, 10, whatever channel you may look at for your pleasure, for seeking information. Of course, we get information from there. But, you know, there's some talk about some disparities. And while I'm talking about that, I want to talk about the disparities in the media in regards to reporting missing persons. You know, we had heard a lot this past week about Gabby Petito. I think I'm saying her name correctly. And then, you know, we heard also very little, but not as much coverage about the young man, Jelani Day, who, by the way, I don't know if you heard, but earlier today they did confirm that that was his body that they found in an Illinois river. So just a reminder, he was the 25-year-old graduate student at Illinois State. Black man. You know, we heard more, though, about Gabby this week than we did. And it's not unusual, but there are some disparities. There are some issues in reporting. You know, when somebody is missing, I don't care if they're black, white, yellow, green, blue, whatever color they are, it's important. It's serious if they're missing. So, you know, that's just something I want to put out there that kind of bothers me. Why don't we get the coverage when blacks, when people of color are missing? Why don't we get the same kind of coverage? Why isn't that covered? Is it purposely? I don't know, you know, but just something to throw out there. I usually open the show and tell you, and I'm going to say I'm grateful to be here, grateful to be alive, grateful to be clothed in my right mind. Been a crazy last week. While we're talking, though, about disparities, you know, I also want to talk about the disparities that we've seen in dealing with the Haitian, what's going on in Haiti. Our prayers are going out to Haiti. Haiti is in devastation right now, and they have very limited resources. So of course people are fleeing. It's a crisis going on, but yet Afghan refugees, the United States, we're the United States. We got the Afghans out, and we brought them over to the United States, but we're turning Haitian refugees around. There's a serious issue. There's a problem. There's a disparity. I'm just saying. I don't know about you, but that's very concerning to me. And I'm hoping that our White House administration is taking a really good look at this. Again, I don't care what country it is. If we're going to decide to help, what we do for one, we should do for another. And that's just it. That's just it. There should be no treatment that's unfair. We treat one better than the other. If this is the United States of America, if it is the United States of America, then we need to act like united. As my brother Phil says, the United States of America. We need to act like it. So that's another thing that's been bothering me this week. finally, two other things I want to talk about before I bring my first guest on. I want to, before I get into anything else, I want to just say my heartfelt condolences to any family who has lost a loved one this past week. We have seen a lot of deaths reported this past week. And, with the gun violence, it's continuing, not just here in Chicago, but we have it going all across the world that things are happening. But I want to send out my heartfelt condolences to Mario Van Peebles and his family on the loss of Melvin Van Peebles, the godfather of the black cinema. He passed this past week, and at the age of 89. I, specifically remember I was young when one of the movies that really that got an all-time that's very iconic and made him iconic, which is Sweetback's Badass. I think I'm saying that Badass, it stretches that song that was released in 1971. Not only did Mr. Melvin Van Peebles play in that as an actor, he co-produced that, he wrote that, he scored, he edited. I think it was on a $150,000 budget, if I remember reading that correctly, and it ended up raking in about $15.2 million. So he truly is a badass when you think about it. My prayers go to his family, and certainly again to a lot of the all families who have lost loved ones this past week. But I just needed to definitely mention that. I want to also share with you this past week. I'm going to continue to say this COVID-19 thing in our schools. It needs to be looked at a little bit more carefully. The CT Union, Chicago Teachers Union here in Chicago, has said that the mayor has not handled this. It's a disgrace in the way in which, she has handled it, so they are saying. I've said it a number of times before. I know we got to get back to moving. I know we got to get back to making that bag. I know we got to get back to these jobs. But we've got to make sure that we're doing it in a safe manner. We thank God for masks. We thank God for hand sanitizer. But again, just, a reminder, our children ages 12 and under, there's no vaccination. We know that they're working on this. They're also talking about the booster. It's a lot still going on with COVID. COVID is not over with yet. So I know we got some people who are some believers in, hey, it's nothing going on. But I'm just saying we have to keep our finger on the pulse of this thing and continually to watch it and monitor it. And really, we need to know what's going on in these schools. There is no real social distancing. And I've heard that not just from my student, but I've heard it from teachers, friends that I have that are teachers. Hell, they couldn't social distance before all of this because the classrooms were full to capacity. So just want to say, again, just be mindful. We have to do everything we can to protect ourselves, but as well as our children. I had to, speaking of children, I was in the ER room on last Thursday. Let me tell you, the news this week brought it out that it's a zoo. But I want to tell you something. I was there with my daughter, my youngest daughter, who's on the cusp of being grown, but she's not there yet. So we went to the children's ER. And I want to tell you that my experience there was unacceptable. Unacceptable. The news is saying call your primary care doctor. Well, hell, that's why I went, because the primary care doctor told me to go there. I never expected to be there almost 17 hours. I never expected that. And it honestly made no sense. Now, some of you would say, hey, Merle, COVID is going on. That's not all that's really happening here. And I want to say this because I think this is important. I had to stay there with my daughter, but you got to know I raised hell in the process. I don't think that it's acceptable to get into an ER room at 4 p.m. and not leave before almost 8 a.m. the next morning. I don't think that that's acceptable for anybody. I don't care who you are, where you are, what hospital you're in. That's totally unacceptable. This is the deal. I feel that we need to, and this is just something for my medical professions, administrators that are out there that are listening, but also for you. We are patients. And when we take our children, they are patients. We have to pay some part of that bill. Most of us do. We don't have the benefit of having 100% insurance, but if you do, you're lucky. That's a great thing. However, this is the point I'm trying to make. When we come into those ER rooms, we should be able to be told out of respect for our time, that, hey, I don't know when we're going to get to you. The beds are full. That's the continuous excuse that I heard, is the beds were full. I didn't need a bed. My daughter didn't need a bed. She needed to see a doctor. And this excuse went on, but I'm going to tell you something else I saw. I saw two families that didn't look like me and most people in that emergency room. I saw two families come in later to that ER. Their children were seen right away and they were released. Something is wrong with that. Now, no, I'm not a doctor. Was it something urgent? I don't know, because they take kids based on whatever the issue is, if it's more serious or critical. Some of your doctors, if you're listening to me, some of the nurses hit me because I don't understand that. And there were a lot of people in that waiting room that did not understand that either. But that's totally unacceptable. And the thing is, and what I kept saying when I went to the desk, I just need to know what's going on. I kept hearing, there are no beds, it's full, it's full. I said, my daughter don't need a bed. She needs to see a doctor. She needs an exam room. Now, are you telling me the exam rooms are full? And most people won't speak up. You got to know that a lot of people rallied behind me when I spoke up. And unfortunately, I didn't have my phone charger, because I would have put this all on camera so you guys could see this. But this is what I said when I asked them to get me an administrator. I said to them, and this is what we all need to be speaking up. We need to learn to speak up and say, I don't care if we're in a different neighborhood. I don't care if we're in a community neighborhood. It's totally unacceptable. When you register me and my child, you should tell me, like the hospitals tell these ambulances, we're on bypass. That means we're not taking any more patients. We can't take any. Tell me that. Don't make me sit there until 3 o'clock in the morning before my daughter gets called and seen and say, well, I'm sorry, the beds are full. And when I said to them, I've worked in a hospital before. My husband is a hospital administrator, not at this hospital. My daughter is a nurse. So I know the lingo, and I'm telling you something in case you guys don't know this. When they use that excuse and tell you, it's not a total excuse, that beds are full. Sometimes what that means that we don't have the staff, and they don't come out and tell you that we don't have the staff for the number of patients that are here. They just kept saying the beds are full. The hospital is totally full. We don't have any beds, and we can't take the people up. And when I let them know, I used to work in a hospital. Matter of fact, right where we're standing, where I was. And that means that you probably don't have the staff. Well, like I said, I had to wait. But what I said to the administrator when I did speak to one, and by the way, I want you to know, I did ask to borrow a charger because I typed to CBS2 investigative reporting, because I want to know why people that don't look like me can come to emergency rooms way after I did. And after I started pitching the you-know-what, I found out there was some people who had been sitting there since noon. Some people since 1 o'clock in the afternoon. I did send a note to CBS2 investigative reporting. Just want to see if they would, go ahead and look into this matter. Haven't heard from them, but, the pen is pretty powerful. So we have to start complaining. And finally, my final thing I'm going to say on this, I think that if the desk could tell you when you're registering your child or you're registering as a patient, if they could tell you, hey, I don't know when we're going to get to you. It could be the next day. It might not be until tomorrow, sometime, whenever. Whatever the situation is, it helps you to make an informed decision to whether I'm going to stay here, whether I'm going to go and try another hospital, whatever. But it's about respect. It's about respecting people's time. And I realize emergency rooms, they have strained resources all over dealing with COVID. But I'm telling you, this ain't all about COVID. We have a labor shortage going on everywhere. And while we have to be understanding about that, I think people have to be truthful. I think people have to be truthful because, see, the truth is, if I was sitting in a community, a safety net hospital, people would have blew up and the news trucks would have been there like yesterday, taking this information in. This is happening all over, and it needs to be addressed. We need to do something different. Okay, I'm done with my Merc rant for today. On to our show. We have an exciting show. I want to tell you it's an informative show. I want to say that anybody that's listening to me that understands, as TD Jakes, the words that are coming out of my mouth, if you understand what it is that I'm saying to you, you will be able to understand why you need to stay tuned and see our next guest that's coming up. September is Life Insurance Awareness Month. I saw Kelly Rowland on a campaign. You remember her from Destiny's Child. The campaign for the September for the Life Insurance Awareness Month it's designed to educate consumers about the importance of life insurance and the role it plays in protecting families' financial security. Tell you a quick story. It's a lot of people that are dying that don't have insurance. And you may say, I hear people say, oh, it's a scam. You don't need no life insurance. I hear people say, well, I can't afford it. But see, here's the deal. My mom used to say to me when I was younger coming up, always save for a rainy day. When I had my oldest daughter, who will be 26 in November, my oldest daughter, she wasn't 3 days old, and my mom started talking to me about life insurance, and I'm like, oh my God, my child was just born, Mom. Why you doing this? It was morbid. It was a morbid feeling, and so I simply had to just say to her, Mom, I don't want to talk about this. I mean, my baby just got here. I don't, and she said something to me that I will always keep here. And she said, you know what, Merle, when your uncle died, my youngest brother, when he was, he was in his 20s when he died. And she said, my mom, your grandmother, had to pass the hat. And I'm like, pass the hat? She said, pass the hat. She said, I had to go into my savings, cousins, we all had to just get money together to get him buried, to get him in the ground, to have a service. And she said, I never want to see that again. I don't want to see it for you. I don't want to see it for me. And she said, we have to be prepared when we lose a loved one. It can happen, whether it be a child, and God forbid, we have to be prepared. So I say all of that to say, I think today's show is important. Please stay tuned, because my next guest is going to tell us a little bit more, a lot more. I'm bringing the expert in the room. Like I told you, I'm not the expert on these matters, but I'm going to bring the expert in the room. My next guest is a husband, he's a father, he's a grandfather. He is the president and CEO of Steve Canty Insurance Agency. This is his second career, guys. He used to work in the advertising industry. He is a graduate of Indiana State University. He's a member of Kappa Alpha Psi, and he participates in the community. He's a participant in the Colin Powell Elementary School Real Men Read program, which we need more people, real men involved in programs in our elementary schools. He was also the 2017 Chicago Defender Men of Excellence Award. I'd like to welcome none other than Steve Canty. Steve, are you there?
I'm here. Hey, Merle.
Hi, how are you today?
I'm doing well. How are you?
I'm here. I've been on a rant. I've been on a page,
That's not a rant. That's not a rant.
I'm here.
That's our cul-de-sac conversation.
Yes.
No, you have to remain diligent. And, as you were talking about the hospital experience with the Miracles Emergency Room, not enough there, but it's the message beyond the message that they don't have the right staff in place or the right doctors in the hospital to deal with that situation. So in that situation, shared communication is critical.
And we gotta make sure that when we're in other communities that we know that that's still unacceptable. Still unacceptable. I'll be on a page about that all day. Tell us a little bit more. Tell my audience a little bit more about you, Steve. I forgot to mention you're my neighbor. Yes, you're my neighbor. Yes. You've been my neighbor. Since 2006?
Wow, that's when you guys got there. We arrived 2001 is when we moved.
Yes.
So it's been a while, but great neighbors. And when I saw you in the drive, and we had this conversation about coming on the show, it's like, can we talk about life insurance? And you and I had the conversation. Okay. And of course, that conversation was good, and that we also had the conversation with your oldest daughter, who you just mentioned, and talked about your mom. But a little more background, you talked about the advertising. So after spending over 20 years in advertising, I really wanted to stretch my entrepreneurial wings. And I found my way to insurance several years ago. But when I look at the two, first career and second career, my real role is to be a resource. And I've been a resource for our community for decades. I think about that time in advertising. And you remember the McDonald's, how many served, billions served?
Yes.
I started thinking about my role in advertising as an account director. Okay, basically guiding multifunctional teams, working with brand management teams and C-suite executives on their marketing initiatives. But when I thought about it, I'm proud that I delivered nearly $50 million to the African American community, and specifically about $35 million to HBCUs with the sponsorship initiatives, the strategies we were able to put together for Kellogg, for U.S. Navy, for Toyota, for General Motors.
Wow.
And when I would go to campus with the bag, I was like, what do you want? What are we talking about? It's like, essentially, I'm talking about money that helps them deliver a message, that helps you fund these programs, educate these kids, build this next generation of professionals. So I bring that forward into my role as president and CEO of my own agency to still be a resource for my clients, for my customers that work with me with respect to their insurance needs. And we'll talk specifically about life insurance, but being a resource and really being an advisor, really talking to people about what their needs are. And it's interesting, these conversations I have. People call me and they don't know me from Apple. but
Right.
they call me because there's something going on. I just had a lady call me, found me on Google, called me the other day, and we started looking at her insurance. She's with another insurance company, but the biggest thing we discovered is um, she is underinsured. She has exposure on a lovely home. She has a home and a coach house, a guest house in back that home on the south side. And what prompted her to call was her insurance rate went up. Her home insurance rate went up. We started digging into it. What we found out is she doesn't have enough insurance on that property. And when we talked about it, it's like, don't be a penny wise and pound foolish, because even that increase, which prompted you to call me, doesn't cover your house. They're insuring your house to rebuild it at $211,000, but your house to rebuild it costs $581,000. So we had a conversation today about you really need to get this right, because they will gladly write you a check for $211,000 if your house is damaged or if it's lost in a fire. But you'll be missing nearly $400,000 in value and won't be able to rebuild the same type of property that you're accustomed to, that you're used to. So I have her full attention, which is good, and we'll talk again tonight. But that's important to me because that gets to the theme you started in terms of disparity. Okay, that house is equity for her. That house has value for her. And we want to make sure that it's properly protected, because when I told her, when she was able to dig into her policy, I go, what is your rebuilding cost? What is your dwelling cost? And when she told me $211,000, I go, that is way off. That is wrong. And with that, you're exposed. Okay. Your biggest asset, or one of your biggest assets, you have exposure on. But what would you rather do? Pay $10,000 in insurance over the next several years and have your property insured properly, or in the event something happened, keep paying what you're doing, or keep doing what you're doing, and lose out potentially on $400,000? So, just made it digestible and simple for her. But let's talk about those disparities you touched on. Go ahead.
Steve, I don't think a lot of people understand what you just said. I don't think that it was just the person you saw. I think
Mm-hmm.
we could do a show on that just alone,
Yeah.
because people, must realize that by you being an agent, we're not just talking life insurance. We're talking about property insurance. We're talking about homeowners. And I have to say, when insurance is going up, when it goes up, I do get flustered,
Mm-hmm.
you know, and that conversation always comes up because I don't think a lot of people understand. They think, well, hey, if my house burns down today, you know, the insurance company they're gonna replace it, you know, and that's the thought, the frame of thought of mine. But the other piece to that is, okay, but why is it going up? I'd rather just, they take the property value. I've heard that
Mm-hmm.
a lot. People will go to the property value of what their house is on property taxes, and they will take a look at that and say, oh, well, this is what it costs. Oh, okay, well, then it shouldn't be any more than this. The coverage shouldn't be any more. So you bring up a great point. You bring
Okay.
up great points, and I think this is something that could be covered, and we need to cover even more of it. And hopefully, we'll get to it. We may even have to do a part two to it. But go on. Let's talk
We
about the
can we can
disparities.
definitely do a part two. But what people have to realize is your policy is a contract between you and the insurance company.
Hmm.
And essentially, when you get through the complexity of that contract, what it's saying is, if something happens to your house, we'll cover you to this level. that's why it's important to understand that level. It's not what you sell it for. It's not the market value of your house.
Right.
It's not what you can sell it for. It is what it costs to rebuild that house brick by brick, two by four by two by four, light switch. It's everything. And usually I haven't seen a case where the two match what you sell your house for and what it takes to rebuild it. So we just talked about it. We moved into that house in 2001. What it
Mm-hmm.
cost to build that house in 2001 and what it cost to build that house in 2021 are two different things, because what's happening every year, inflation, two by four, the cost of wood, the cost of materials right now are crazy.
Skyrocketed. Mm-hmm.
Over the last quarter, I think there was maybe a 2 to 3% increase in building materials. So all of
Mm-hmm.
that has to get factored in, but that gets a little technical. My thing is for this person who called me 2 days ago. I think I'm happy that we're able to discover that, because I kept going, okay, what is your dwelling cost? And I had her go find it. And when she found out it was that low, like, that's an issue for you. But we're on our way to fixing that, to coming up with a solution for that. Um, let's talk about that life insurance, because that disparity piece, you hit on a couple of things, and you and I have talked about your mom and her starting life insurance policies for your daughters when they were born. I had a similar conversation with my sister. It's like, I need to talk to you about the life insurance for your kids. I don't want to talk about life insurance about my kids. I go,
Right.
why not? She goes, well, I don't want to think about my kids and death. I was like, well, okay. I didn't want to talk to you about your kids and death. I wanted to talk to you about your kids and wealth transfer, and how one policy, the right policy, can take care of 3 generations of your family. But since we're on the subject of death, we're all going. I just want to make sure that, at least you have the information and that you're prepared, and that you can potentially prepare a policy that can take care of you, your children, and your grandchildren. And once you start that cycle, it continues to repeat itself. Because what I've seen and what I've learned is, for centuries, other communities have had access to permanent life insurance.
Mm-hmm.
Okay, we might call it universal life, we might call it whole life, but that permanent policy is going to last you up until about the time you turn 120, 21 years of age. Just about every life insurance policy I've seen from many different carriers, it stops when the person turns 121 years old, that permanent policy. We've had the conversation, there's term. Term insurance is to the date. I start a policy today for a 10-year term policy. 10 years from now, on this day, that policy reaches its maturity. It can continue if you're paying $50 a month for the next 10 years for this policy, for, $250,000 term policy. Okay. On that 10th year, the day of that 10th year, that policy is probably, the premium is going to increase. It doesn't end. You can pay the increased premium, and it's going to be a big increase, but that's pretty much based on actuary tables, actuary science, and a big piece of that actuary formula is mortality rate data. The older you become, the more expensive your insurance becomes, because you're getting closer to your date. If you can walk in and tell me what day you're going, we can get on the phone with the actuaries and they can do a different formula specific for you, but that's not how it works. Going back to the permanent insurance, we've had this conversation about that permanent policy. My buddy was playing college football, and his teammates' grandmother passed away. He had to leave the team, leave the campus, and go home for her service. When he came back to campus, he drove back in a new Ford F-150. and everybody's going, "Hey, how's it going?" And it's like, "Okay, Grammy's good. She's at rest, and everybody's moving forward, dealing with the grief and bereaving. But hey, Grammy left me this truck. She left me a house, and she left me some cash."
Wow.
So unpack that for a little bit, okay? Two of his largest expenses in life, a house and a car.
Yep.
Grammy took care of it, okay? Through her will, through her life insurance policy. She has set him up or put him on a trajectory to be able to do what? Use money he would have been paying
Right.
for a house and a car, use it in different ways.
Mm-hmm.
Invest,
Yeah.
save. I don't have to pay a mortgage because Grammy left me a house. I don't
Wow.
have to pay a car note for 5 years because Grammy just got this new car and I'm going to use that until the brakes, come off. So you start thinking about that. I had a conversation with a new client last week. 35-year-old young man called me, needed some health insurance. Got him set up with that, and he's like, "I also need life insurance." And we started talking about it. He just wanted a term policy. He's like, "I want something right now for me and my wife. They're both 35. If something happens to me, I need some resources in place for her to move forward, okay, to be able to take care of this house." What's the value of the house? Okay, the value of the house is $230,000, and I need some more money. So we did a $500,000 policy, which for a 35-year-old, I think that policy cost him $40 a month.
Woo. Nice.
But we had another conversation. I go, because I sent him some of the same information I've shared with you,
Right.
brochure, and just times you talk about life insurance. Are you getting married? If you're getting married and you're putting two people together, all of their assets, that means your exposure is going up. Your assets are going up, and your exposure, the cost to replace those things, all of those things are going up. Are you having a child? And I
Mm-hmm.
asked him that question. He goes, "Actually, in the next 24 months, we plan to have our first child." And we started talking about that. I go, "What do you want to have, a boy or a girl?" He goes, "I just want a healthy child." I go, "That's not what I asked." I go, "What do you want to have?" He's like, I want a baby girl." I was like, "Okay." So I put together a life insurance illustration for a baby girl. And what I shared with him was the cheapest time to buy life insurance, or the first time you can buy life insurance with most carriers, is when a newborn turns 15 days old. That's the
Wow.
cheapest it's ever going to be in that person's lifetime. From that point forward, the
Well,
price keeps going up slightly.
Reese's.
But the concept is, the younger you are, the further away you are from your final day. So the younger you are, the cheaper the life insurance is. So we started talking about it, and I shared with him. I sent an illustration for a 15-day-old baby girl. Okay, and I just put baby girl in his last name, so call it baby girl Canty.
Mm-hmm.
And I started sharing with him, okay, I say, what is the cheapest way for you to buy $500,000 guaranteed? It's like, it's life insurance. One of the cheapest way you can buy it guaranteed, because the life insurance permanent contract is simply stated, you pay this premium from this date to this date. And as long as this premium is paid, we are guaranteeing you this benefit, the death benefit, the face value. But the other thing in that policy is cash value. That is what was in Grammy's policy that sent that young man back to
Mm-hmm.
campus. The cash value. Grammy left him a truck, a house, and cash. Okay. So
Mm-hmm.
we started talking about baby girl Canty. Okay. Sometime in the next 24 months. Like, if you look at this, by the time she's 10, you pay on this policy for 10 years, a 10 pay. Okay. It's like, Merle, give me, or really give yourself $30,000. Because in a 10-year period, that $30,000 for baby girl Canty paid out over $600,000 in her lifetime. So at age 10, if you paid $30,000, this is a rough example, and I'm happy to put together an illustration for anybody's baby girl, anybody's daughter, anybody's parent. But that $30,000 in cash value matures over the life of that policy. And in that illustration, you see exactly what you pay for and what you receive. And it's guaranteed at 3%. Okay. There's a guaranteed side and a non-guaranteed side. The non-guaranteed side pays out more at about 3.75% or 4% for some people. Depends on the company, and it depends on how they structured that life insurance policy. But the important thing is, if you think about it, okay, if I walked across the street and said, Merle, give me $30,000 and I'm going to give you $600,000 back. In essence, that is what's happening in that life insurance policy. You are taking, because the policy's front loaded, you're putting that money in, and what is the insurance company doing with it? Investing. Okay, they have some of the best, they have all the actuary formulas. That's how they're able to guarantee it. But when you stop thinking of insurance companies as insurance companies and think of them as investment firms, that's where your premium goes. Your premium protects your property, it protects you, it protects your valuables, it protects your loved ones, but is being invested in such a way that they can take care of that claim, that auto claim, that pipe burst claim, that roof wind claim. They can take care of all the claims as well as pay the life benefit when it's due. So when I showed him two examples, $250,000 in, I got a little excited, and he was excited as well. I showed him what that $500,000 policy looks like. A bigger investment. It's a car note. Okay, it's a car note. But if you're able to sacrifice or plan and be disciplined enough to meet the requirements of that policy paid out over $1 million. Okay.
Wow.
And I told him, I was like, when baby girl Canty goes to school at 20, this is how much cash value is in that policy. You never have to fill out a paper, an application. It's your money. All you do is pick up the phone, call your agent, and say, I would like to take out a loan against my policy. I've had customers call me, how much cash value do I have in my policy? Like, you have X. Cut me a check, and I'll come by your office tomorrow to get it. I literally took out a check, put it in a printer, wrote him a check for the money he needed, which he was going to go pay bills for. He paid it back before the interest kicked in. It's his money. It's your money to do with it as you please. So for baby girl Canty, she has money when she goes to school. When she goes to buy her first house, there's cash value in there, over $100,000, depending on the benefit of the policy or the cost of the policy. There's over $100,000 in there by the time she turned 30. It's like, okay, so when they are assessing you or looking at your assets for your loan, do you have any assets? Oh yeah, my dad has a life insurance policy which has X. Okay. I usually have a conversation when that person turns 75 years old and how much money is in that policy. There's several $100,000 in that policy, in that illustration, in that example I shared with him. Okay. What is that money used for? Long-term care. If I have to go into the nursing home at age 75, and nursing homes cost, a good nursing home costs $70,000 a year, or an assisted living facility.
It's not cheap.
It's not cheap, and you
I've
know,
priced it. I've
you
priced it.
know, because you've had to do the research. You've had to deal with
Yeah.
that real world issue of
And that's happening to a lot of us. And we think it may be many years away, but we have to take care of aging parents.
yes,
And we
yes,
have to think about that if for some reason we cannot, you know, I did look into that. Of course, when my mom got sick and she needed rehabilitative care, and they were talking about a nursing home, and even though she had insurance, insurance denied it. But if
mhm,
I wanted her to have it, you're talking about, man, they were talking something astronomical like 5,000 and something a day. And I'm like, oh my God, what would it cost if she stayed here on a normal basis? And they were
mhm,
like, if there are memory issues, I mean, they tack on, this doesn't even include meals. And
yeah,
then they start talking upward range like $6,000, $7,000. So long term care is another conversation
mhm.
that we need to have.
They're 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 riders in some permanent policies that allow you to convert that money, that cash value for long term care. So with the boomers, you know, more and more boomers are reaching that stage now. Okay, and life insurance companies became more strategic or smarter by making sure that that financial asset is more readily available for that client when they need to do something different with it. Back to the young man, um, we did his term policy his $500,000 term policy last week. He said something to me during the conversation as I gave him all these concepts for baby girl Canty, you know,
Hmm.
and he goes, we were talking about wealth transfer and how, you know, that policy could be used for you, for him, if he needed final expenses, if he needed burial costs, because the money he put in there, that $30,000 he paid over a 10-year period, has matured and grown in cash value to X, to several
Hmm.
$1,000s. Like if your daughter needs money to bury you, generation one, she can take out a loan and do that. Okay.
Hmm.
And then if she needs money to buy a house, to buy a car cash, I don't need your financing. I just pick up the phone and go pull cash out of my life insurance policy and go buy myself
Hmm.
a car. She can use that money while she's living. And then even if you don't pay it back, if you just pay the interest, whatever the difference is, if you had a $500,000 policy and you use $75,000, when that policy cashes in for the final death benefit, you subtract that $75,000 that you took out to use while you were living. But then the rest goes to your beneficiary, the third generation. Is
Generational wealth, in a sense.
That's how it gets transferred. So he said something to me. He goes, "How come my parents never had this conversation with me?"
Yes, right?
It's like, let's do the history on that. Let's talk about the policy man
Yes.
who came across the tracks to our end of town, selling
Going way back.
nickel and dime policies for burial, for final expenses that there was barely enough money in that policy to take care of those final expenses. So let's think
Hmm.
about that disparity you talked about, Merle. Okay,
Yes.
he's coming over there doing his job to sell those final expense, those burial policies. But I go, I told the young man, I go, well, think about it. When the policy man's in the neighborhood, the neighborhood didn't have the financial wherewithal to
Right.
afford those policies he was selling on the other end of the track, on the other side of the tracks. So I go, for centuries, others have been able to afford these policies and build that wealth through life insurance and transfer it from generation to generation. And he goes, yeah, now I get it. And he said, okay, I fully expect that once baby girl Canty gets here, we'll be having that conversation. Or when she's
Hmm.
on the way, we'll be having that conversation. So he's in a position. He's a young entrepreneur, serial entrepreneur.
Mm-hmm.
He gets the value, but in terms of when I told him, it's like once you do it for one generation, once that policy cashes in, once that policy benefit is claimed, okay, you do it again. The first thing you do with that money is you go buy more life insurance. So you begin the cycle of generation after generation. And when you think about it, touching 3 generations, think about $1 million coming into your family, guaranteed. Merle, just give me $80,000 and I'll give you $1 million back.
Wow.
Because I can show it to you
Yes.
in an illustration, okay, and in a meeting about life insurance, but it's all there in black and white. No mystery.
Mm-hmm.
I'll take out all the complication. We'll just use simple language. Simple language. Hey, give me 30 or give yourself 30 and you get that $500,000.
Steve, I'm going to ask that we take a pause for we're seeing a technical problem, and we're just going to take a pause for just a few minutes, and then we're going to pick up where you left off. I do see someone that has a question, and when I come back, we're going to resume this conversation, with much needed conversation on life insurance, generational wealth, and
Okay.
what people need to know.
Very good.
So you were talking about life insurance. You were talking about generational wealth, and how life insurance could be used not just for burial benefits, but to pass down from one generation to the next. And you were talking, and you said something that the young man that you were talking to wanted to know why his mom or his parents had this conversation. I think that was a lot of us. We talked about in the old days what used to happen. I have something that comes in from my brother Phil, who's standing by, and he made a comment, and I want to just shoot this out to you. He said this whole thing just boomerangs my mind to reparations. I just wonder how well off African American descendants of slaves would be if the estimated, in some circles, 69 trillion in reparations would be. Is it netted out to families? We've been blindsided for so long. That is one of the comments that I am seeing. So as we're talking about this, because again, these conversations didn't happen. We didn't have the wherewithal. We didn't know, but today we know better. And when you know better, you do better. And yet exactly right. We still have a lot of people. I think I was looking at the report. I didn't get a chance to finish it. I want to say they said 54% of the average Americans have insurance. But what it is that other 46%. I'm not sure if those numbers were right. I didn't have a chance to really take a look at that. But I just know that there's still today, in the last 5 years, and this may not sound like an astounding number, I know at least of 8 funerals that I knew about that there was no life insurance. And out of those 8, maybe 3 of those were older women who buried their husbands who had wiped out what little savings they had. So still in 2021 today, we still have a lot of people that are not insured. Just I think it's the AJ Johnson, the comedian that passed this week. Yeah. Very good example on social media. Again, if I was Meg the Stallion, we have 1 million people on right now. But the conversations we really need to really be in tune to. Here was a comedian, a well-known comedian,
58 years old,
who did not, supposedly, his family did not have enough to meet his burial expenses. So that's somebody who's in the limelight. So you can imagine what's happening to everyday people. And yet these are the conversations that you would think would get millions of views. But a lot of people don't want to have this conversation, maybe because of why I didn't want to have it when my daughter was 2 or 3 years old. It's something that mortality is not something that we want to talk about.
Mm-hmm. It's mortality or death is inevitable.
I can't hear him. I can't hear you, Steve.
Okay.
It could be me, could be on our end. Did you hear me?
I can hear you.
I can't hear you. He heard me? Okay.
Can you hear me now?
No, I can't hear you now.
Okay. Should I go out and come back in?
Sounds like they're working. Can you hear me now, Steve?
I can hear you.
Okay, great. Did you hear what I said?
Yeah.
Okay, I'm sorry.
That's okay.
Again, we had another technical. We got to get this. Okay.
That's okay. It's live.
Yes.
So,
yes. So, I mean, that was a lot I said.
Well, now, Phil touched on something. The reparations debate continues. Okay. And when you can't even get the study to actually get the figure right, is it 69? Whatever the figure is for Phil, that debate hasn't even reached a level where we can even determine what that is. In the meantime, just having this information, I think I got my first life insurance policy. I was in my 30s, and I wanted to go whitewater rafting. And, my wife told me, "Yeah, you can go after you go get a life insurance policy."
Wow.
I did, and I think for that $250,000 policy, my first one, it was $50 a month. It was a term policy, but had anything happened to me, there were resources there for my family to move forward. And
lose it after an hour. I'm sorry.
That's okay.
Just making sure technically we're good.
Okay. That's the important thing, just being able to assess, what your needs are from a life insurance standpoint. If you add up everything you own, everything you owe, look at your wealth, and it's like, okay, how much does your family need in the event you die and they lose that paycheck? Okay, you start setting that up. There are many ways to get to it, or to try and find the right amount for you or what you can afford. But someone told me a long time ago, I had a brother in Ohio teach me a lot about life insurance, and he's a whiz. But someone said to me a long time ago, some life insurance is better than none at all. Okay, so
absolutely,
if that hat is being passed on top of a $10,000 policy, that's better than none at all. Okay, and sometimes you have to look at your auto insurance.
Oh yeah.
Okay, there are death benefits in some auto insurance policies if you die in an auto accident. I have policies with
wow.
one of my carriers, or several of my carriers, and my Erie insurance policies. Okay, if you die, there's $10,000 in your auto policy for your death benefit. And you have to be able to dig in and get that type of information to understand, because then that becomes an asset for you. That takes away some of that expense for your final expenses. Okay. We were at a funeral, and we went through the eulogy, we had the service, and then the announcement was made that there was a repast in the basement, and the burial would take place later for a smaller group. And my wife told me the next day, it's like, why we didn't go to the cemetery? I go, no, She goes, there wasn't enough money for them to pull the backhoe up, dig the hole, which she said cost $8,000.
Yeah.
Okay. So they were going to do it at a more economical time to fit their
Wow.
budget. I go, wow. So when you look at that, we really have to take the information. We talked about this. You take the information and you empower yourself. Okay. You say, okay, at least I'm going to do this. And the catch 22 is when you're 20 and 30 and just getting your career started and money's tight, you know, you think you can't afford it, but it's actually cheaper than you can buy a $250,000, $100,000 policy for $20 a month. If you can save or spend $20 a month. So you really just have to have the conversation and find out where your sweet spot is. Okay. But, these life moments, birth, buying a house, getting married, again, as you start amassing more assets, you're also amassing more exposure to risk. And you have to be able to have a conversation with someone to help you manage that risk and be able to have the right insurance in place so that you and all of your folks are protected.
Well, Steve, what I hear you saying is something, you hear a lot of people say, "Oh, I can't afford it." But the truth really sounds like they can't afford to not have it.
No.
And people don't really see that until that happens. And that's a hell of a time to see it. So I think the information that you're bringing us today is empowering. It's an empowering moment, and it's a moment that if somebody, even if they're not in their 20s or their 30s, and at this moment that they don't, maybe they're in their 40s or their 50s, and life expectancy is longer. I got a great aunt right now that's 99 years old. She never thought that she just made 99. She has lost 4 out of 5 children and had to bury 4 children. And it was fortunate that she did have insurance. And then there's been situations where I hear people thought, I've heard people having to pay. People don't realize even cremations cost money. And they've had to, they thought maybe their son, or they thought maybe their nephew, or they thought maybe their brother had insurance, and come to find out they didn't. And they didn't, their savings wasn't great, so they had to get on credit cards. And to be able to take care of those final expenses or push back the cremation until they had money to take care of it. So I think that this is a conversation that we need to continue to talk about. I would like to, just for the sake of time, I'd like for us to be able to come back together, if you'll agree to come back. We will continue to have this conversation because I think it's a conversation that, again, I didn't have this conversation with my mom coming up. A lot of us didn't. My mom did always say, save for a rainy day. And by her experience, again, as I shared the story in the beginning, she said, I don't want to see you like, I'm not saying it's going to happen, but again, if we are going to do nothing else, we need to bring the information, and what people do with it after that, of course, is up to them. So I think we need to continue this conversation on insurance. Whether it's life insurance, wealth transformation, property, and whatever, we need to have this conversation. I do see a comment that came in. Always heard males are more expensive to insure than females. Is that, would you say that's a myth, or is that true? Or
that is true, and that's just based on actuary science and how males are evaluated. Being at risk more, having riskier occupations, And this is just historical data. So that's why I asked that young man, what do you want? What do you want to have, a boy or a girl? And I told him why. It was for that exact reason. Anytime I run a illustration, I see that difference between a male and a female. But the other thing we can empower ourselves with is the younger you can start. Okay. And, I have conversations. I'll talk to people about different types of permanent policies. But I like that policy you can pay for in 10 years, in 15 years, in 20 years, and be done. So my cousin's a pharmacist, and we did a 10 pay for her. She's always done well. She came up hard. Okay. Came out of pharmacy school, connected with a pharmacist with Walgreens, got a signing bonus, started investing. She's done extremely well for herself. But when we did her policy when she was 35, the comment she made, because I go, this is it. Everything that is on these pages is exactly what you have. You pay this from this date to this date, and this is what you have for an asset. And she looked at me and she goes, I wish we'd had this conversation when I was 25, because I'd be done now. But when she's 45, she has a policy that is done. She never has to put another dime in that policy. Okay. And then there's ways for her to not pay any tax.
Yeah.
On that.
Absolutely.
On that benefit once it's claimed. So, like I say, there are many ways to do it. I see individuals that have investments, 401ks, mutual funds, stocks. And I had this conversation with one of my frat brothers who had just taken a beating because the stock market hiccuped and he lost money. I go, that money's gone, right? He goes, no, I'm going to, keep investing, play the long game. I go, no, the money's gone. Okay. The money you lost in your 401k, it's gone.
Forever, good for good. You can't get it back.
But what I see others doing that have diverse investment strategies is going to get a big life insurance policy that's guaranteed at 3% or 4% to offset some of that loss. Again, what's the cheapest way, or one of the cheapest ways, to buy a guaranteed $1 million? And we can look at it in an illustration. All you have to do is stay the course for that 10 years, for that 15 years, and then bring your family into the discussion and go, from this point forward, this is how the Huckabees roll. We roll with this type of life insurance that allows us to generate wealth and transfer it from Merle to Faith, from Faith to Layman.
And so on and so on and so on. And that's why I'm glad we had that conversation so I could share it. And I'm glad, that you came onto the show today. It's a lot more that we have to talk about, but we're going to have to do a part 2 to this one. I want you to tell people, Steve, where can they get in touch with you at?
Let's see. My office is in
Steve Canty Insurance Agency is first.
Yeah. I'm sorry, I didn't have my cue card. It's back there.
No. That's why I'm here. Yeah. Steve Canty. Yeah. I'm just throwing it out. The Steve Canty Insurance Agent.
Steve Canty Insurance Agency at 219-533-0040. Again, 219-533-0040. The website is just Canty, INS, Canty Insurance, or CantyINS.com. And you can always send me an email at stevecanty19@me.com.
And
Steve, just call Merle.
You
And
are
so,
in, your office is in Indiana, but you can insure still. It's important that people know in Illinois as well. Is that
yeah,
correct?
I'm a dual state agent, so most of my business is in Illinois. Um,
Okay.
that's just home, and
Okay.
that's where the business was started. But I had a great opportunity working with Erie Insurance to start an office here in Munster. So it's, what is it, 90? What was my address? 9345 Calumet Avenue, Suite 100B.
You don't have one of those Teslas that automatically drive to your office, do you? Is that why you?
No, no, but
I was
I
gonna say
think
I haven't
about it.
seen it, but automatically drive. But I know sometimes it just escapes us. We just go.
I think
Um,
about it. I passed the airport where um, Miracle takes her lessons every day. You know,
yes, yes, yes. Out there
doing
at
the
the
Lansing
Lansing
airport. So
airport.
yeah.
Yes. I want to thank you for coming on.
No, thank you for having me.
Again, I think it's important that people know that they can reach you with whether it's life insurance, auto insurance, property insurance. They can reach you at 219-533-0040. And that's Steve Canty of the Steve Canty Insurance Agency. Again, 219-533-0040. And what is your email address again? You said Canty19 at
Steve
me.
Canty. Yeah,
Steve
Steve
Canty,
Canty 19, Steve Canty 19 at me.com.
me.com. Okay.
We'll just call Merle and
That's true.
send him my way.
I will definitely do that. Thanks so much for coming on. We're not going to have a chance to get to our second guest, my brother Phil, today, but that's okay because he wanted me to tell you that $20 a month, that's the kind of information that wasn't available to many in his circle, and I can certainly say that too at that age.
Mm-hmm.
So certainly, Steve, it is always a pleasure. I always learn something when I speak and talk to you. But thank you so much for coming on today, and we look forward to having you back here on the show. And you enjoy your evening, and you certainly have put a lot, I'm sure, on my mind and other people's mind. But insurance is definitely an investment. Either you're going to pay now or you're going to pay later.
So
So
look
people have
around you.
to pick and choose. Either they want their savings wiped out of everything that they have, and I've seen that.
Mm-hmm.
So definitely, thanks for coming on,
Thank you, Merle.
and we look forward to you coming back and continuing part 2 to this conversation. I want to thank my viewers. We had some technical difficulties, but we thank you for staying with us, tuning in, and whenever you see this show, please like, share. And definitely let us know. Give us some comments, but share this information. That's why I'm here to share this platform to empower you. As Dr. King once said, we start to die the day that we become silent about those things that matter. And so I want to thank you for joining us today. We will see you the following week, I believe. We may be back next week. I don't know. But until then, stay safe and just know that we wish you a happy and a great weekend. And let's enjoy the rest of this beautiful summer, even though it's fall. Have a good evening. And thank you for joining us here on Real Talk.